Hey everyone, my name's Logan Ransley, and this is Jeff Badu. We're streaming live to you today, and very excited to bring you this virtual event. I'm currently based in Auckland. Jeff is based in Chicago, from memory. Just
Yes,
please drop a message into the chat and let us know where you are joining from. And I just want to do a bit of a audio check and a video check just to make sure everyone can hear us okay. So on the screen, you should see a chat window. Feel free to drop a message into there. Hey there, Pamela Huntsville. Nice to see you joining in today. Everyone else who are currently just joining, feel free to drop a message into the chat and just let us know where you're joining in today. I see we have attendees joining from us all across the country. So while we wait for the remaining attendees to join, I'm just going to give you a quick overview of today's structure and what we're going to be covering. So in part one, I'll be sharing a short video that looks at the overall rent collection trends across the US by using Landlord Studio's kind of data set. And this basically allows us to better understand how COVID has impacted the real estate industry particularly. And then in part two, I'll be interviewing Jeff here, and we'll be going through several questions in order to get some kind of expert advice and perspective on the changes that are currently happening in the industry, and including the American Rescue Plan that has been recently released. And then in part three, I'll be sharing a short video about how using cloud technology like Landlord Studio will help you save time and money when it comes to rental accounting and management. And then finally, in part four, we'll be finishing off our webinar with a live Q&A session to answer any key questions you might have for Jeff, myself, any of the research that we've shared today, and our businesses, Badu Tax Services, and also the Landlord Studio. So feel free to leave your comments and questions in the chat as we go through, and we'll do our best to answer those right at the end. So I'm just going to give a little bit of time before we kick off. I see there's a few more people joining. Great to see there, Teresa, Tiffany from New York City, Manuel from Chicago, Barbara from Idaho, Chicago again from Waddell. Appreciate you guys joining in here today. I'll just give a few more seconds and then we'll kick off with part one and we'll share that video. So I hope you enjoy this research that we're bringing to you today. And again, if you do have any questions regarding both Badu Tax Services and our research, feel free to drop those into the chat as we go through. Cool. I will go ahead and share this video. I will share this now, and then we will connect with you very shortly.
Seminar, we're going to look at the overall rent collection trends by using a unique data set to better understand some of the key challenges that landlords are facing and will have to deal with over the next couple of years. We'll analyze data collected from several sources, including our own software, Landlord Studio, which gives us unique insight into rent collection trends and the impact that COVID-19 has had on the industry. We'll also explore how, by using software like Landlord Studio, you can navigate the current negative trends with better financial and time management capabilities. But first things first, my name is Logan Ransley, and I'm the co-founder of Landlord Studio, a rental accounting and property management solution that has helped thousands of people across the country save time and automate their rental accounting. Now here's a little bit of a backstory. Meet my business partner, Charles. Now, while Charles was living in London, he began looking at investing in rental properties because the technology salaries were high and the market was right, so he thought, where else better to put your money? Except there was one problem. He didn't want to use a spreadsheet to track his income and expenses. When he couldn't find an app suitable for the job, he ended up building his own one. After putting it on the App Store, hundreds of people started downloading it and leaving positive feedback. He realized he had just solved a massive problem in the marketplace, that there really wasn't anything else suitable to just simply track your income and expenses.
Now here's what we're going to cover. In part one, I'll take you through an overview of the data, insights, and emerging trends that we're seeing happen right now. For this, we'll use a segment size of around 12,500 active rental properties across the United States to see how rent arrears and vacancies are increasing.
We'll also cover the emerging trends of strong real estate markets despite all the uncertainties, and how average rents have fallen in several key cities. With this, we'll further analyze why we are seeing these trends and what these trends mean for the future of the rental marketplace. Throughout 2020, our team saw clear trends emerging in the rental market that coincided with the impact of COVID-19, the government stimulus action, and shifts in renters' demand. Among these trends were a few key insights, including an increase in missed and late rent payments due to the arising financial pressures on landlords and tenants. The impact of COVID can be seen most clearly in the months of April, where missed rent payments increased by 2% compared to March. This was also seen in October, where missed rent payments increased by 2.3% compared to September. And finally, towards the end of the year, as on-time rent payments dropped by over 4% between December and February of 2021. In addition to the increase in late and missed rent payments, occupancy rates at the end of the year and into 2021 have seen a gradual decline as well, with Landlord Studio data showing the average occupancy rates dropping 2% between October and February and falling below 95% for the first time in over 2 years. The data is starting to tell a very interesting story. While major cities have seen dramatic drops in average asking rents, the affordable mid-sized markets continue to boom. This trend is driven by an increased adoption of remote working places for many people, as renters are now looking for homes with more space, preferably a home office, and of course more affordable rents. Many renters are also less willing to commute great distances. With this move away from larger cities, we've seen a rise in vacancies in higher cost cities like New York, San Francisco, and Los Angeles, which has in turn led to massive decreases in rental prices in these areas. However, despite all the negative trends we've outlined so far, the market continues to look strong. Government aid has helped support some of the most vulnerable individuals, which in turn has reduced the risk of late and missed rent payments during a financially difficult time. And houses are flying off the market because of a supply shortage, an increase in demand, which is due to a spring freeze in buying, paired with historically low interest rates and changing job situations. With the end of the pandemic closely tied to the rollout of the vaccination, we're likely to see a continuation of migration away from city centres for 2021. We expect this to drive the rise in available housing for rent in these areas and a continued drop in asking rents, though slower than it has been. Suburban areas and mid-sized markets have become increasingly desirable for both renters and first home buyers, with more space being a key draw as work from home orders continue to get extended. Other desirable traits are a personal outdoor space, as well as proximity to beaches, trails, and other open spaces such as parks. A less positive but equally important factor for rising vacancy rates is the growing concerns for landlords around evictions and increasing numbers around rent arrears. With the eviction moratorium having already been extended twice, landlords need to be very careful about who they rent to. Now, further government stimulus action in the form of the $1.9 trillion stimulus package was signed into law by the Biden administration on the 11th of March, along with another stimulus check and the extension of an increased unemployment, which includes aid for 3 key areas of housing. The first is additional financing for emergency housing vouchers, essentially extending the Section 8 program. This aid is to support those that are homeless or at risk of becoming homeless and will be distributed directly to the local housing authorities. The second area is specifically for homeowners. There has been no funding dedicated to assisting homeowners since the pandemic began. And so the American Rescue Plan designates $9.96 billion to provide direct assistance to the homeowners themselves. This is a new fund, and qualified individuals will be able to use this money to help pay mortgages, utilities, pay back taxes on properties, HOA fees, etc. Thirdly, the American Rescue Plan includes $21.55 billion in emergency rental assistance to augment the funds that were provided to the states and territories in December. These funds can be used by renters and families to pay the rent and utilities so that they can stay in their homes. We've included a few resources so you can familiarize yourself with the rental assisting programs in your area and share these with your tenants if necessary. With this extensive financial relief package, the continued aggressive rollout of the vaccine, we wouldn't be surprised to see the market returning to almost pre-COVID normality towards the end of 2021. With all this said, if 2020 has taught us anything, trying to predict the market's future is a fool's game. With the increased uncertainty caused by COVID-19 and a rapidly changing market, landlords need to better prepare themselves better than ever with the right knowledge and tools ready to face the unexpected.
So I hope this research and data was useful for everyone, and to better understand more about how the industry is changing due to the impact of COVID-19. I'm just going to drop a free download to our latest data index report into the webinar now. So you can have a look at that. It has a bit more of a breakdown about what we've discussed in that video. And then essentially what I'm going to be doing now is speaking to Jeff. So I'd love to introduce our special guest speaker today, Jeff Badu. Jeff Badu is a parallel entrepreneur and wealth multiplier. He's a licensed CPA and the founder and CEO of Badu Enterprises, which is a multinational conglomerate that owns several key companies. So today I'll be asking Jeff several questions around that data, what we're seeing, and how you can best prepare your real estate business from a tax perspective, and just touch based on the stimulus bill and to make sure that you're staying on the safe side of COVID-19, essentially. So how are you going today, Jeff?
It's going pretty good, Logan. Absolutely. Definitely appreciate you for having me today. And it's always an honor and a pleasure to speak to a group of like-minded people. And I do see that some people that I invited actually are attending. And I do want to give a shout out to the Badu Tax Services team that's listening now. Looks like we have, Eugene, we have Nicole, we have Latoya, we have Waddell as well. Hopefully I'm not missing anybody, but definitely appreciate you for having us today.
Not a problem at all. Appreciate you and your team joining this webinar today. So I'd love to get into asking you a few questions, particularly around this American Rescue Plan, as this is probably one of the most important pieces of legislation that has been released. So I guess one of my first questions is, how will this American Rescue Plan help real estate professionals specifically? I'd love to get your kind of perspective on that.
Yeah, I mean, great question. One thing about when I speak, I like to keep it pretty real, pretty honest, pretty sincere. First and foremost, I think that the American Rescue Plan was great, right? Because of the fact that it's putting more money into tenants' bank accounts. It's giving them stimulus checks in the form of $1,400 per person. That allows them to take that money, circulate it back into the economy, and cover their rent, anything that they need to cover. So in essence, this is putting more money into, not in a bad way, but it's covering the rent to help the landlords a bit, because at the end of the day, the number one thing that we need to fund in our lives really is our shelter, right? A place where we can stay. In Chicago right now, I think it's about the rain, right? And somebody who may be homeless, for example, may not have the shelter that we all have today. I'm fortunate enough to be in my home office today, to have a shelter, right? And be able to have a place to live. So overall, the fact that they're giving stimulus money, direct payments to taxpayers, to the American people, it's a good thing for landlords because it allows them to cover rent. So that's one part of it. Unemployment, right? The additional $300, same thing. You get money, you look at your bills, right? You look at your financial situation, and you tackle bills one at a time. Now, my opinion, save first or invest first, right? Pay yourself at least 10% of that money, And then you go ahead and start looking at your bills. That mindset is going to shift everything. But, in general, though, on the $300 extra unemployment per week, that's going to put more money into the landlord's bank accounts as well. So that's another thing. I haven't even hit on the big fish yet, but let's just talk about another one. And I was actually looking at the slide that you mentioned that talk about the 1,400, the 300, the rental relief program. I think this is a big overlooked thing. A lot of people are overlooking this. You're talking billions and billions of dollars to assist with rental relief. And I can tell you right now, and our company, Badu Investments LLC, we control 57 units on the south side of Chicago. 3 of our tenants are behind on rent right now. The first thing that I think about, okay, well, what about offering them rental relief, a program, right? Just send them the link, say, hey, this is how you apply. Just educate them a bit. So our property manager, what they did is they went ahead and created a folder, right? Put all the documents in there, all the leases and everything like that. And we're probably going to share that folder with the tenants so that they see what we're going to submit on their behalf. And if you're in my state, the state of Illinois or city of Chicago, then you can basically tell them to go to IHDA, Illinois Housing Development Agency, IHDA.gov, I believe, and they apply. It's a very, very simple, easy application. They apply. They just need to know some information about their rent. They need to prove that they're out of work. So long story short, a $5,000 check comes to the landlord. By the way, that was from the second stimulus package, which they haven't even distributed that money yet. And we're already on the third stimulus package, right? So they owe landlords $10,000 basically per tenant. So let's just say I have these 3 tenants. Well, now that's $30,000 that comes to the landlord directly. It goes directly into the landlord's bank account. What that allows me to do is it allows me to pay my mortgage on time, right? Now that's circulating the money again back to the bank. And so what happens overall when you release more stimulus into the economy is it helps landlords be able to cover, it helps the tenant cover their rent, which helps the landlord cover their mortgage, right? It avoids homelessness in the form of evictions. It avoids foreclosures, right? When you can't pay your bank on time. And then people are already sort of deferring their loan payments already, They're basically deferring it out. I've heard somebody who's done it for about a year now, an entire year where they're deferring the forbearance, taking advantage of the forbearance program. So if you're a struggling landlord and you can't pay your mortgage, reach out to your bank immediately. Say, hey, I heard about this forbearance, I'm behind. So what can you do for me? Always ask the question. Now, here's the downside of this whole thing, though. The downside of this whole thing is that when you release more money into the economy, there's a term, kicking the can down the road. Basically, there's a lot of people right now that are at the risk of an eviction. There's a lot of people right now at the risk of foreclosure. So when you keep releasing money, and they need to do this, I don't blame them for doing this. You keep doing that. What happens right now is home prices are going up. They're going upwards. The moment they stop the stimulus program, guess what happens?
Yeah.
2008, June, just downhill. I mean, a big drop. You're talking about a 30 to 50% drop, if I could predict. That's being conservative, by the way. So what happens then is now people have to sell their homes underwater, right? So they get foreclosed, they do a short sale, they get underwater. And then all of a sudden, it's like, okay, I got to get rid of this home. But what happens, though, it releases more renters into the market. So for the landlords that keep their property, that's good news because now you have more demand for your property because the homeowners have been foreclosed on, God forbid, but they've been foreclosed on. They've been short sold. So now, and a lot of these people at risk, by the way, are single family homeowners. Those are the guys that can't really pay their mortgage right now because they don't have any income coming in really to cover those mortgages outside of stimulus payments. So long story short, I love the fact that the government is really taking care of their people and releasing money. They actually just came out with a $3 trillion package, the fourth stimulus package, to be released very, very soon. So that we're not even done with the second one yet. They're already talking about the fourth one. So it's good, but to be honest, I am afraid a bit for people. So what I'm trying to do, the reason why we invited you guys today, is to educate you, give you some education on this stuff. Because if you're not prepared, and let's say 2 years from now, COVID dies down, vaccines, everybody's vaccinated, herd immunity, whatever they call it, and the world goes quote unquote normal again, and they decide to stop the stimulus package, which I don't think they will, but let's just say they did, man, like imagine rain of glass. Like imagine it raining glass all the way down, on the planet.
Yeah.
That's basically what would happen there. Home prices would just drop tremendously. People would go homeless, unfortunately. And, as part of the Badu Foundation, we actually help prevent people from going homeless. So we would have to step in and really, really take charge of that. So long story short, it's good that they're releasing stimulus. I think they just need to be very, very careful and have a backup plan when things may go downhill when they stop all the stimulus package.
Yeah, that's very interesting. And I guess a follow-up question to that, particularly around, I guess, the threat of real estate prices dropping or coming under attack from that. Would you suggest that it's a good time to be investing in real estate right now, or would you suggest to be being a bit more conservative around that approach because of what's happening here?
I think it's a perfect time to be in real estate. Perfect time, in my opinion. The reason why I say that is because there's never a bad time to be in real estate. Because let's say we go back to 2008, everything goes downhill. Warren Buffett buys out the whole world, right? Let's just say that happens again. Well, if you got cash sitting around, or you're a fairly wealthy individual, now you can snag up some of those properties, put some tenants in there, stabilize it a bit, wait till the market goes back up. You can sell it, right? You can keep renting it. And for us, for our investment company, we don't ever plan to sell everything, to be honest. We might, if anything, we'll refinance, we'll get some equity out, buy some more properties, that whole strategy. But overall, I would say that as a landlord, or just somebody who's looking to get into real estate, brand new real estate investor, you want to be careful, right? You want to be careful, because if you don't know what you're doing, if you don't know this type of information, this type of data, that stimulus is good, but what happens when they stop? They will have to stop at a certain point. Prices will go down, and what happens? People are losing their properties right now, and we haven't even seen anything. Home prices are going up right now, and people are still losing their homes. So my thing is, it is a great time to directly answer your question. It is an awesome time to buy real estate because, you'll be paying at a higher price, but the cash flow that's coming in will also be higher because of the fact that people are getting stimulus checks. They do have these relief programs, the IHDA, for example, the IHDA.gov program, where they're giving out 10,000. We already had tenants in the first stimulus package who got their first 5,000. Now they're about to get an extra 10,000. That's $15,000 per tenant. If we multiply that by 57, that's a lot of tenants. That's a lot of money.
Yeah.
Let's just say all of our tenants were behind, hypothetically, right? Let's just say, God forbid, everybody was behind.
Yeah.
That's still, exact. It's a terrible position to be in. But when I know that my tenants can potentially get $15,000 and it comes to me directly, I'm a little more comfortable. I just need to tell them, here's how you apply, here's where to apply, right? I'm walking you through the steps and everything like that. So it's a great time, but I just want people to be careful because, people are going down this road of they're price hunting. They're like, they're squeezing pennies. And this is not the market to be squeezing pennies at all. Like, if you find a good deal, buy the good deal, hold it, right? Rent it out to a tenant. So for investment, I should rephrase this. For investment purposes, it's a great time to buy. But if you're a homeowner, then really do your research, understand the market you're going in. We already saw some numbers with New York, California, those places that are going down like crazy in value. So, long story short, buy now, right? Make sure you have good reserves, maybe 3 to 6 months, stash somewhere, just in case, something that can hold you up. And always take advantage of these programs, stimulus checks, unemployment, the rental relief program. Take advantage of those, because if you don't, and now they run out, then who's to blame, really? That's the thing.
Yeah. It kind of leads quite nicely into my next question is there's potential threats. So what kind of key financial threats do you see evolving for real estate investors over 2021 specifically? We've obviously got the stimulus bill. Are there any kind of other financial threats that you see evolving around, particularly for real estate?
Yeah, I mean, the only threat that I really see is prices going down and tenants not paying on time. So it really ties back to the points earlier, but overall, like anybody who's listening today, I really take this information, embrace it. First of all, embrace the information and figure out a game plan, right? Don't sell. It's buy low, sell high. Warren Buffett is one of my idols in life. He says, buy low, sell high. We don't necessarily, and if you're going to buy high, make sure you sell higher, so that's the thing. Like, it is a great time to buy right now, in my opinion. Home prices are higher than, we would like. But when I'm getting cash flow is king. Cash flow is what the name of the game in real estate. I imagine that's why everybody got into real estate to begin with, to have money deposited into their bank account every single month. That's what's called cash flow. So as long as the cash flow is good, then you're good. As long as you screened your tenants, and let's say you made a mistake, your screening wasn't good enough, and now they owe back rent, then make sure they apply for these programs. So to any risk, there's always a rebuttal to that risk. And so I have a very, very positive outlook on real estate across the country. And that's why I'm saying I don't think it's ever a bad time to buy real estate. I think that it's always a good time to buy, because no matter what, your strategy, I mean, it depends on your strategy. Like if you're a flipper, you want to be careful. You want to be very careful, because with flipping, I've flipped 2 properties before and I didn't have the best experience. As a flipper, you're kind of relying on timing a bit. And let's just say you hit the bottom, right? You're about to flip your property, you hit the bottom. Well, now you're in a very risky scenario. But if you're a landlord, you're collecting cash flow every single month. Who cares what the price of a home is? Whether it's literally $1 or $1 million and it's making you $10,000 a month, the price is just a magical number that's just thrown in the air. Yeah, it might suck when it comes to refinancing and all that stuff, but as Thomas mentioned here, he says, agree, home value only matters when you are buying or selling. That is true. And even when you're buying, I don't think it matters that much outside of to the appraisers. That's really it. The bank and the appraisers, that's all they really care about is the value. But for me, as an investor, as a landlord, I care about cash flow. If the building cannot cash flow, I am not buying it. Straight up. We have different metrics in our firm. We need a 10% or higher cap rate, which means that the income and expenses, if you take it over the lifetime of the loan and, you factor in the mortgage amount and everything like that, I need a 10% return on the money. And then cash on cash return is simply how much am I going to return on my money that I put in, and for us, it's 20% or higher.
Yeah.
Exactly.
So I guess one of my questions is, and potentially what the audience might wanting to know as well, is what ways can a CPA or a tax service provider, how can they help real estate investors, and what are the kind of services that Badu tax services offer, and how do they help real estate investors get ahead?
That's a great question. So I think this will be appropriate to reintroduce myself, and
Yeah.
that will lead into our essentially our service offering. So first and foremost, I do want to thank everyone for joining today. Appreciate you, Logan, for definitely putting this together. My name is Jeff Badu, and I'm a parallel entrepreneur and a wealth multiplier. I'm the founder and CEO of Badu Enterprises LLC, which is a multinational conglomerate in the finance industry. What we do is we provide a suite of financial services, including our marquee company, which is Badu Tax Services. And that's the firm that does tax preparation, tax planning, and tax representation for individuals and businesses across all 50 states in the US. And we have clients in over 20 countries at the moment. On top of that, I am a real estate investor. I own a company called Badu Investments LLC. We buy apartment buildings on the south side of Chicago. Right now, we control 57 units on the south side. And so what we do there is our goal is to stabilize the community, stabilize the economy a bit, and make sure we provide good, solid housing to tenants and make sure that they have a good community. On top of that, right, we have the Badu Foundation that educates, provides financial literacy education to the youth ages 6 through 18 and anybody who's experiencing homelessness, ironically, right? So, we're there to do that. And my purpose in life, and I appreciate the shout out for the book, Infinite Expansion, but my purpose in life is to inspire and support the super hungry to take hold of infinite resources in order to create an abundant lifestyle. So how can a CPA help you? First and foremost, not all CPAs are created equal, with all due respect. Some CPAs are just tax preparers. They just prepare your tax return, hand you the documents, and you're good to go. Some people do it in as quick as an hour. Some takes a little bit more time. But how can a CPA really help you? It's a service called tax planning, which a lot of people don't know about, and most CPAs don't even know what it is, yet alone do they even offer it. So what we do is we proactively plan your taxes for you. So tax planning is a set of strategy sessions that we typically have, during a year to proactively plan out your taxes in order to help you minimize your tax liability. So some things that we discuss are, deduction review, looking at all your tax deductions, making sure we're claiming your depreciation, repairs, your maintenance, your travel, daycare, whatever it is, we help you claim all those expenses. We do some strategy planning, right? We look at legal entity optimization. We recommend softwares to you, such as Landlord Studio, that you can use in order to manage your properties and make sure you track your finances for your rental properties or your real estate. So that's just a bit of what we do. But basically, a CPA can help you plan out your taxes proactively. For me, I'm more of a financial advisor. So I don't just do taxes, right? That's a big part of what I do. But I look at your overall picture. I want to see your portfolio. What is it that we're looking at, right? I'm a real estate investor myself, so we speak the same language. I want to know your goals. How many properties do you want to own next year? Are these rentals? Are these flips? So when I come into a tax planning meeting, or even in the first meeting, our initial kickoff meeting, I just want to know your goals. I want to understand what it is that you're about. And then I can make recommendations. Okay, use this software to track this, right? I'm letting you know about the deadline. April 15th, now it's May 17th, is the deadline to file individual income tax returns. Partnerships and S Corps was on March 15th, and that's every single year. So I hope you navigate through that. Last but not least, yes, I am a tax preparer. I am a tax professional. Shout out to the Badu Tax Services team members that joined today. We do file income tax returns to make sure that we're accurately preparing your returns for the IRS and to the state authorities.
Awesome. I love that. And I guess one of my final questions is, from a record keeping perspective, how important is accurate bookkeeping, particularly for rental properties? Is it, from a tax perspective, to be claiming all those expenses and depreciation, etc.?
Yeah, I mean, it is so critical. It is so critical. So basically, right, when it comes to taxes, first and foremost, you do want to make sure you're keeping your record straight. You want to keep it nice and clean. You want to use software such as Landlord Studio, for example, that can nicely organize you in order to keep track of your finances, right? So you want to know, as a matter of fact, just think about it for a second. You own a 4-unit building on the south side of Chicago, and you want to buy more properties. Let's just say I'm a lender, right? And I'm looking to help give money to landlords to fund their 4-unit buildings or whatever other real estate ventures they have. And I ask you the very, very simple question: how much money in rent did you collect last month? And you can't answer it? That's a problem. That means you're not serious enough about real estate. I'm sorry. If you can't answer that question or give me maybe an indication hey, I collected about X amount, that means you're not serious enough about your real estate. That's how serious this stuff is. You need to know your numbers like the back of your hand. You need to know how much rent you made last month. You need to know how much you spent in repairs. You need to know how much you spent in supplies, right? Property taxes, mortgage interest, whatever it is. And you need to be using the softwares in order to help automate this tracking for you. That way, when the lender asks you the question, you can just say, "Oh, hey, here goes a report. Here goes a Landlord Studio report. Here you go, right? It shows your income, it shows your expenses," and they're like, "Wow, this guy or this girl is serious because I didn't even ask for all of it, but they just sent it to me anyway." They're serious investors. So if I'm a lender, think about it. If I'm a lender and I'm asking you for that and you provide it, that lets me know, that gives me an idea that you're probably a serious person. And not saying that you're not serious if you're not tracking. It's just that, you have to know this information. You don't wait till April 15th to know this stuff. Because no wonder 9 out of 10 landlords fail because they're probably not tracking this stuff, brutally. And yes, I am an accountant. Yes, as a real estate investor, I am the accountant. I am the lead, chief financial officer, whatever you call it, for the real estate company. So I track it mercifully. But that doesn't mean you shouldn't be tracking it as well. So it's very, very important at a minimum to track it. And then about receipts, yes, you should keep your receipt. All you got to do is get the receipt, download it, save it in a folder. Get the receipt, download it, save it in the folder. If it's physical, take a picture, save it in the folder, toss the original. If it's physical, take a picture, save it in a folder, toss the original. And that's it. It's very, very simple. This stuff is so simple. It's just, we've got to get into the habit of it. And if you can't do it, right, if you don't have the time, if you're so busy at work, you're cranking 80 hours a week, then I think you should get a bookkeeper to help you with that.
Yeah, I very much agree. So, well, it's been great to chat with you today, Jeff, and I think you've given the audience some really good insight and value, particularly around that American Rescue Plan and how CPAs can help. And I guess the importance of taking this stuff really seriously. Following this, we are going to finish off the webinar with a live Q&A session to answer any key questions you might have for Jeff, myself, or the research. So feel free to leave your questions and comments into the chat, and we will do our best to answer these as we kind of go through that Q&A session. So now I'm going to share a short video about our software, Landlord Studio, and how it kind of ties into some of those aspects that Jeff is talking about: accurate bookkeeping, making sure that all your records and your receipts are well digitized, etc. So I'll share this now, and then we'll come back, and then we'll kick into that live Q&A session right at the end. So we'll talk to you soon.
Cool.
Navigate the current trends and provide you with the tools to better your financial position. Landlord Studio was built with a single purpose in mind: simple financial management and tracking for rental properties. We've built a suite of tools to help you both manage your leases, rent arrears, tenants, and expenses so you can stay on top of your finances despite facing the complexities and the challenges of the impact of COVID-19. In this overview, I'm going to show you a few of the features to help you automate your workflow and track your finances so you can stay on the safer side of these challenges faced by so many landlords. Getting set up is as easy as typing in your address. All you need to do is type it in, and Google does the rest. You can even add your mortgage and valuation information, or any other property details. Go ahead and tap Save, and you're done. Once your property is added, you're ready to start tracking your bookkeeping, leases, tenants, and documents. Setting up a lease can be done with our flexible range of tenancy options. You can choose from monthly, weekly, Airbnb, or other options. All you need to do is enter the commencement date, the rent amount, and the payment due date. You can even enable online rent collection. This will enable your tenants to pay you online. Go ahead, click Save, and you're done. Our powerful automation features will remind you and your tenant when important things are due. Things like email alerts can be set up, as well as optional fields for this lease too. Go ahead and select your tenants, either from a prospective or a new tenant. This can be done as simple as entering in their name and their email address and clicking Save. Once you've added the tenant, go ahead and continue, and then you're done. Now it's time to track your expenses. Say goodbye to manual spreadsheets and paper receipts. Our Smart Scan feature will import the information straight off your receipt and upload a digital copy for safekeeping. All you need to do is select the category and tap Save. That will upload the receipt and save it against this particular unit for safekeeping. And let's say you forgot to add your expense. You can simply use the secure bank integration to automatically import your bank transactions straight into the app so that you can then go in and reconcile them later on. Easy. Now, bookkeeping isn't useful unless you can analyze your cash flow in a simple, visual, and flexible way. That's why we have over 15 professional reports you can generate right from the app. Choose your properties, adjust any of the filters here, and then click Continue. That will create a report directly on your device. We also make it simple to send to your accountant or CPA. Tax time just became much easier. Now, Landlord Studio is the highest rated property management and rental accounting software on the market. And in August, Gartner even released a product report rating Landlord Studio as the most usable property management software on the market. And these are some of our customers. There are 3,500 of them in over 60 countries across the world. So you can be sure that Landlord Studio is providing you with the best tools to automate your rental property business. If you'd like to learn more about Landlord Studio and how it can help you automate your rental property accounting and management, head to www.landlordstudio.com or reach out to our friendly support team. We'd be more than happy to help. Thanks.
So hopefully that video was helpful to show you how using cloud technology like Landlord Studio will help you save time and money when it comes to rental property accounting and management, etc. So if you would like to check out Landlord Studio, feel free to head to www.landlordstudio.com. I'm also just going to drop a link into the webinar now. This will allow you to just check out our website and learn a little bit more about that product. And also, if you do have any questions, you can always reach out to our support team. So I'd be more than happy to help there. So we've reached the final part of the virtual event today. I hope you've enjoyed it so far. Jeff and I are going to stay around here for 5 to 10 minutes or so to just answer any questions you may have for us. So again, just please drop your questions into the chat on this webinar if you would like any of those answered, and we'd be more than happy to do that. So feel free to drop that into the chat there. if you do have any questions for Jeff or myself, I'd be more than happy to help. I'm also going to drop a link to Badu Tax Services, so feel free to check out Badu Tax Services at www.badutaxservices.com. I'll also drop that link in here just now, so feel free to go check out Jeff's business and his team there. They'll be more than happy to help you with any of the tax services that you're needing and financial advice and preparation. So feel free to check them out and reach out to their team if you need to. Cool. Well, okay. So Thomas, what are some of the advantages over QuickBooks? So QuickBooks was really designed as a small, medium business tool for accounting. What we've found is that QuickBooks has to be essentially worked and almost hacked together to make it work for rental property units. So one of the biggest problems is tracking on a unit basis. So what Landlord Studio offers is essentially a breakdown that's very focused on the building itself and the property, where you can add all your different units. And then what those units can be set up as is you can then track all the income and rent for each one of those units. So you can actually run reporting on each of those units. You can track expenses related to each of those units, etc. With QuickBooks, essentially because it's been designed for one business entity as a whole, you have to use things like jobs, etc., to represent those properties inside your business. So what we've done is basically made it very easy and very streamlined for a real estate professional to track income and expenses for each individual property. So the end of the tax year for doing taxes becomes a lot easier, but also for drilling down into data.
Logan might have dropped off there. Let's see. All right. Yeah, we'll just give it maybe about 30 seconds or so. Sorry, guys. Looks like we're having a bit of technical difficulty. Let's see.
Looks like I dropped out for a second there. Yeah, finally, Landlord Studio offers a lot of the property management aspects around the bookkeeping. So it just allows you to automate a lot of the rental property processes that you need to do. Question for you, Jeff, I think. When you assist your tenants through the stimulus process of the IHDA, they get $1,400 and the landlord gets $5,000, or is it based on how far behind the landlord is?
Yeah, great question. So basically, the $1,400 we're referring to is just the stimulus check. That's what everybody in America gets, pretty much. The $5,000 is an automatic payment. Basically, once you're approved, if you're approved, the landlord gets the payment, the full $5,000, to cover back rent and also future rent. And the reason why is because we have so many landlords at risk of being foreclosed, and so many tenants at risk of going through an eviction. So basically, something's got to give when it comes to that.
Cool. Hopefully that answered your question, Manuel. If anyone else has any questions, feel free to drop them in before we wrap up today. Again, I appreciate everyone joining in this webinar today, and I've really much enjoyed this and learned a lot from Jeff himself. So also appreciate you joining us today. Can you confirm it can be used towards future rent from Thomas? That would be related to the stimulus process too.
Used towards future rent as well. But in order to qualify, that tenant must be behind on rent currently.
Cool. Not a problem. So what we will do now is I think we'll wrap up today's webinar. Again, appreciate everyone joining in today. Feel free to check out badutaxservices.com and also Landlord Studio. Thank you very much for joining in today, Jeff. Really appreciate your time and also just providing some really useful insights and information for the audience today. So really appreciate that.
Yes, sir. Thank you. And thank you guys for joining.
No problem. I hope everyone has a great week, and feel free to reach out to us if you have any questions. Until then, we will talk to you later on. Cheers.